Well, good afternoon, good evening, folks. Welcome to this pre-analysis of the Berkshire Hathaway annual shareholder meeting. I'm Ronan McGovern, or Ronan McSauron if you see my name in Irish on YouTube. You can follow me on Twitter at Ronan K. McGovern, or if you can't understand my accent, you can try reading instead, looking at www.ronanmcgovern.com. All right, folks, before I start, just want to say thanks to our gold sponsor here, Point 5 Brewing. Point 5, crisp, refreshing, non-alcoholic, brewed traditionally as a pilsner with alcohol gently removed. This allows you to invest with confidence while having a beer. Non-alcoholic beer. So, cheers. All right, now on to the main business here of this pre-stream, which is to talk about how does Berkshire Hathaway, Warren Buffett's company, make money? What have they been up to over the last few months? And what kind of questions are we going to expect at this 4 o'clock meeting with Warren Buffett? Now, generally at this time of year, this whole meeting would be on in Omaha, Nebraska, and there'd be over 40,000 people there. I was there myself about 2 years ago. And it takes place in a very large stadium where there'd be actually 6 hours of questions for Warren Buffett and his partner, Charlie Munger. Now, Charlie Munger, being in his late 90s, he's not going to be on the interview panel today, interestingly. It'll be another colleague, Greg Abel, who'll be sitting beside Warren Buffett. So very interesting to see how Greg Abel does for the first time beside Warren Buffett. Also, today's session is just online. It's also just going to be for 1 hour, 45 minutes of questions, and then 15 minutes of company procedures and stuff. So with all of that, let's move over to find out how does Berkshire Hathaway make a bit of money. Okie doke. So if you think about Berkshire Hathaway, you can kind of look at the company in 3 different slices. Basically, you're looking at, and let me just check, I have my screen right here so that everybody's seeing it properly. I have to admit I'm a bit of a newbie here. Oh, that looks beautiful. All right, we're back in business. So Berkshire Hathaway, you split it in 3, an insurance company, it also has non-insurance businesses, and then it has equity holdings, so it owns stock in other publicly traded companies like Apple, for example. Now let me go through each of those in turn. So the insurance company is important, partly because it makes a bit of money, but also because it provides a lot of money to invest, and I'll explain why that is. So, I pay a premium every month when I have car insurance. And then the insurer takes that money and they'll pay out if there's car crashes. So they'll have to pay out some of that money. And the difference between what they take in and they pay out will either be a profit or a loss. But because they're getting my premium and premiums from everybody else, they tend to have a lot of cash in their bank. And their average bank balance is high just from holding those premiums that haven't been used to pay out any losses. And in fact, Berkshire has got so much in premiums, about 129 billion in what's called float, so cash that's just accessible to Berkshire, and it can use that money to invest and make a profit off those investments. And because Warren Buffett's so effective at making investments, he's able to really put that money to good use from insurance. So insurance as a company, it's useful to make a profit, but it's even more useful because you've so much cash on hand that can be used to invest. And what Buffett does is he buys whole companies, like these non-insurance businesses, and he also buys stock, like in Apple. So let me talk about those. So in terms of non-insurance businesses, Berkshire owns a railroad, BNSF. They own utilities and an energy company, Berkshire Hathaway Energy. They also own manufacturing companies like Lubrizol and Precision Cast Parts. They make cast parts for, say, the airline industry, and then some other stuff. And those wholly owned businesses are actually quite stable, so they generate profits very stably every year, which then feeds in to provide more money to be invested by Warren Buffett. Now, the other thing he does with cash, and he started to do this more over the last few decades as opposed to the early days, is invest in publicly traded companies. And he started to spread a bit wider on that. Over the last decade, he started to invest in Apple. He's been a long investor in banks like Wells Fargo, Bank of America, also an investor in American Express. He's taken smaller positions in airlines, haven't done well recently, but he is an investor in quite a few airlines. He's been a long-term investor in Coca-Cola, got in quite a long time ago when the stock was trading a lot lower than it is now. He's a major investor in Kraft Heinz. And then there's some other stuff, including Occidental Petroleum, which is an oil and gas company I want to come back to and talk a bit about later. So let's look into a bit what each of these sections brings to Buffett and Berkshire Hathaway in terms of earnings, or you can look at that as profits every year. All right, so here's a split from the annual report from the end of 2019, and it shows how much was earned, or you can think of it as profits, by Berkshire Hathaway in each of the calendar years 17, 18, and 19. Now, the first line is insurance underwriting. That just means the difference between the premiums they took in minus anything they paid out for losses, minus any operating overhead. So you can see they don't make a ton of money on insurance underwriting. 325 in 19, that's 325 million. 2018 they made 1.5 billion, but 2017 they lost 2.2 billion. So some years they win, some years they lose, some years they might have a big loss, like with Hurricane Katrina or that kind of thing. Generally, Berkshire tends to be break even or a bit better on the insurance underwriting side. But where the real value comes, as I said before, is they can invest that high cash balance they have from holding the premiums. Now, part of that is reflected here in the second line, which is investment income. And this covers, say, interest that they get on bonds or dividends they get on the stocks they hold. Now, there's a reason why this is probably an underestimate. In fact, it definitely is an underestimate of the value of those stocks and investments. And I'll talk about that in the next slide. But consider this a major bucket of income for Berkshire Hathaway. The next one is railroad. So they own a very large railroad, BNSF. That brings in a lot of cash very stably. They also have quite stable income from utilities and energy. Berkshire Hathaway Energy includes some wind energy there. Same on manufacturing, quite high profits coming in every year. And you can see these numbers have been growing, or at least are stable over the last few years. Now, when you see a presentation of earnings or profits, according to GAAP or the accounting rules, they now have to include their losses on stocks that they hold, like Apple. So what this means is if the stock market goes up, which it did in 2019, they'll report a big gain here, 57 billion. But if the stock goes down, like the stock market went down, at least the stocks they held in 18, they'll report a loss. So this really kind of confuses the accounting, because depending on what the stock market is doing, this number, when you add it on to the actual profits, and these are not profits, they're just changes in the stock value, it tends to confuse what you think are the earnings. So Warren Buffett recommends, and I can see the logic to kind of ignore these numbers here and focus on what's the underlying earnings in the wholly owned businesses, and then separately look at the earnings on these stocks rather than looking at just their value at a given point in time. And I'll do that in the next slide. Just a note here, there was a Tax Act change in the US in 2017, so there was kind of a windfall profit that was earned by Berkshire that year. That was just one-off, but it also had a big impact on what the reported earnings were as well. So what I want to do now is I want to simplify this down a little bit and take out what Buffett would consider not important, and then also try and adjust here for the fact that the investment income is not fully reflective of the value of those investments. So with that, here's a list of the top 10 stocks that Buffett held as of the end of 2019. A lot of household names here: American Express, Apple, Bank of America. All right, I've mentioned a few of these. And you can see he has fairly significant stakes in a lot of these companies. He's not just tipping in and out with a few percent. He's going up to 10, going up to 20. Often you'll see that he's trying to stay under 20% because it can trigger some rules then around disclosing his stake in the companies or other added bureaucracies. So you'll often see him stay below that 20%. Now here you've a split of Berkshire's share. So Berkshire's share would be, say, 18.7% of what the total American Express dividends or retained earnings were. So basically, if you combine the dividends and the retained earnings, that's the total amount of Berkshire's share of the American Express earnings. And only a portion of that was paid out as dividends by American Express. The rest, presumably, and likely was reinvested. So these companies, they are paying out dividends, and that's showing up, like on the previous slide here, as part of the investment income. But the companies are also reinvesting profits in their own businesses, significantly so, to the tune of 8 million would be Berkshire's retained earnings from these 10 holdings. And so even though that's not included in the previous slide, it's not included within that 5 billion figure here, it is a real type of earning that is beneficial to Berkshire because it allows the companies it owns stock in to reinvest, and that's going to help them grow over time. So what I'm saying is, yeah, you need to, I'm not saying this originally, Buffett will say himself, you need to also consider these retained earnings and add them into the profits that Berkshire is generating overall. And so that's what I've done here. So copying over from the table before, I've just copied in the numbers. There's all of the income or profits from underwriting, the investment income, which doesn't include retained earnings, railroad, utilities, manufacturing, other stuff. And then you could consider adding in retained earnings from stock. I've just added in 8.3 billion there. It would actually be a bit higher because this is just the top 10 holdings. Buffett also owns, he does have other holdings, so you'd actually need to increase that number. So effective earnings, if you look at it this way, and again, this is low because I haven't included all the stocks, you'd have 32 billion. So you can think about Berkshire generating 32 billion in earnings in 2019 or profits. So just, what does that mean? Or is that good value, I guess, is one of the questions you could ask there. And to think about that, you can look at, what's the market cap or what's the value of Berkshire as a company? Because you're thinking about, okay, how much profit is it generating per year compared to its value? That gives you a sense of the profits relative to the cost at which you'd have to buy in at. And the latest value I just checked as of the close of the market yesterday was 444 billion. You can see I got that there from Seeking Alpha. Of course, it was a bit higher before the crash with COVID. It was probably up above 500 billion. But COVID took it down a bit and it's recovered a little bit. So for this 444 billion, you're getting at least 32 billion in earnings, maybe a bit higher, as I said. And another important point here is that Berkshire has got a lot of cash on hand. So you're not just getting these earnings, but Warren Buffett is keeping about 120 to 120 plus billion dollars in cash just ready to invest. So you could also think of this as the company's worth 444 billion, about 120 of that is cash. And so the difference, maybe something like 320, for 320 billion, you're therefore kind of buying 32 billion in annual earnings, maybe about 10%. So that's one way to think about value, and you can think about, is that good value if I'm getting 32 billion a year for investing in something at 444 billion? That's just one way to think about the business, I suppose. So with that, I'll just summarize kind of a few reasons why Berkshire is being successful. So they're good at running insurance. They break even, or they do a bit better than break even. Plus, they have this huge amount of money that the insurance creates through the cash they hold, and they can invest that. And Buffett is very good at investing that money that he has on hand. He's very good at picking stocks, but he's also very good at buying whole businesses. Now, it's hard to buy whole businesses right now because he's so much money, he can only really buy very big businesses. And those big businesses, there just aren't as many. So he's less choice now that he's so much money to play with. The businesses he does wholly own, they tend to provide a stable stream of income, of profits every year. So he has that money as well. That's allowing him to make even more investments. And then of the stocks he owns, a lot of them pay dividends, like bank stocks or Coca-Cola. So that's also giving him some cash, and he's really got a lot of money then that keeps being generated every year that he can reinvest. Now, moving gears a little bit, I want to talk about the first quarter. So what happened during the first quarter of this year, January to March? Of course, COVID-19 hit towards the end of the quarter, around midway through March. So to be honest, there's not a huge effect on financials for a lot of companies because there's just a few weeks out of the quarter that were affected. So I'll go through the earnings here, and I'll just note again, the net earnings attributable here at the bottom are pretty meaningless because the stock market tanked. So he's recording a paper loss of 55 billion because his stocks that he owns have gone down in value. So this number here is not really that useful, but we can look at what the earnings, the profits are from each of the separate businesses. And if you do look at those, basically the business looks fairly similar from 2020 to 2019. You can see insurance underwriting's a little down on profits, railroads a little down, utilities are a little down, manufacturing's a little bit down, and other is a little bit up. So taking out the effect of the stocks, which aren't a measure of profits, it's just a change in the value of the stocks. There's not too much different or unusual that happened in the first quarter of 2020 compared to 2019. Now, one thing that people have been asking themselves is, well, would Warren Buffett buy back his own stock? So something that Berkshire Hathaway has been doing for the last few years is it will go out and use the company's money to buy stocks from people who own Berkshire Hathaway stock. And what that does is it reduces the total number of stocks that are outstanding. And because there are less stocks, each stock is then worth a little bit more because it has a larger share of the overall pie. So the general thinking is, although not really followed in practice with a lot of companies, you want to try and buy back when the stock price is low because it's cheaper to buy back. So when stock prices drop, you would think, well, maybe Berkshire will buy back some of their stock. So the stock did fall. It actually went up as high as probably 230, a little under that. And you can see with COVID onset, it went down as low as about 159. And it's recovered a little bit since, so at about 182 right now. So yeah, I think a lot of people would have said, well, you know, Buffett, he's been spending about 1 to 2 billion per quarter. Now he's a cash balance of about 120 billion, so it's not that much he's spending out of that. But he's spending about $1 billion, let's say, per quarter buying back his own stock. So wouldn't this be a good chance to buy back his own stock? And he kept buying back stock actually before COVID. So you can see January 3rd to 15th, he was buying stock at 226. He was buying stock at 214. February, he was buying stock in early March at 214. But this is all that's reported. So as far as I can see, Buffett seems to have stopped buying back any stock before. He stopped buying back stock once COVID basically hit. Which seems to suggest that he's being pretty cautious. And you can see that in the cash balances as well. So if you look at the assets at the end of the first quarter 2020 and at the end of 2019, you can see here that the cash, it swapped a bit from cash to short-term investments. There's not a huge practical difference in those. And so if you look at the sum of these columns, you'll see that his cash balance or short-term investment balance has basically increased a little bit. So rather than actually spending on buying new companies or buying back Berkshire Hathaway stock, he seems to be taking a very cautious approach and trying to settle in to weather the storm. In fact, he sold he sold some of his stock in some airlines during the first quarter, and that's partly why his cash balance went up a little bit. So definitely a sign that he doesn't feel the market is ready to get in and buy. All right, so moving on to the next part of the presentation, I want to chat a bit about questions for today's annual meeting. One question I feel he will get is around airlines. Airlines, of course, have not done well over the last month. Here is Southwest Airlines, a major US airline. That, by the way, is very conservatively run and holds a lot of cash. You can see that their stock has fallen from almost $60 right down to $30. So almost a 50% reduction. And Buffett did sell some of his Southwest stock. So one question you might be asked here is, well, will airlines weather the storm? I think he'll also be asked whether oil companies will weather the storm. Oil prices have fallen. He did a $10 billion funding deal for Occidental Petroleum, which is a petroleum company, as the name suggests. And he did that deal, very sweet deal, where he got an 8% dividend, so he gets paid 8% interest per year in addition to being able to hold the stock. And that company now is in a position where it's actually paying out the dividend in stock rather than in cash because it has a very large amount of debt from having made an acquisition towards the end of 2019. So Buffett somehow could end up with quite a bit of stock of Occidental Petroleum if he keeps getting paid his dividend in stock rather than cash. And I'm not really sure why he did the deal, because he typically avoids companies with a lot of debt, and It'll be interesting to see what he says on the future of oil companies and where he feels the risks are. I guess he might just say he's not too sure, and he's often quite honest in answering questions like that, perhaps more than I'd like, because when he says I'm not too sure, it doesn't really give me new information. Some other questions here. Well, banks. He loves the banks, and he owns a lot of banks. I think he'll be asked whether the banks have enough liquidity to weather the storm. A lot of the US banks have continued to pay dividends, while European banks have stopped paying dividends during COVID. Now, European banks probably are in less good of a state than US banks, and apparently US banks are in a better state. They have more cash than during the financial crisis. But liquidity of banks might be a question. Another question that might get into politics a little bit is around the $2 trillion CARES Act. That was the act that was brought in federally to give money to unemployed and also to small companies and large companies. He might be asked what he thinks of that, if more is needed, if he agrees with it, if it was too soon, too late. He'll probably also be asked what he expects for revenue and earnings over the next quarter or two. Of course, the first quarter results don't really say too much about earnings because there was only a few weeks of COVID included in those results. Another watch out, Greg Abel. I'd mentioned him. It'll be his first time on a stage with Buffett. He runs Berkshire Hathaway Energy. I think Berkshire shareholders are used to hearing Warren Buffett. They're used to hearing Charlie Munger speak every year. I don't know how many years they've been doing that for now, but a lot. So it'll definitely be new to have Greg up there with Warren, and I'd be curious who's up there next year. I hope that Charlie makes a reappearance. I think people generally find him insightful. He does not say much, but what he says is good, and it'll be a pity he won't be there this year. I'm sure he'll be watching. And then my wild card is, I don't know, they just love asking about Tesla. I don't think Warren Buffett is a huge fan of Tesla. He said that he wouldn't buy Tesla, but people just love asking about energy. They love asking about Tesla, so wouldn't be surprised to see a Tesla question coming in there. So just to note as well, Buffett says he won't comment on individual stocks, unfortunately. He also won't comment on politics, although he usually gets dragged in a little bit and makes a few side remarks. We'll see. 45 minutes is not a huge amount of time for questions. That brings me to the end of my presentation. Just a fun lookout. Keep an eye out for the cans of Coke. Big fan of the Coca-Cola is Warren Buffett, in addition to a bit of McDonald's for breakfast. Can't say I recommend it myself, but loyal to his brands and companies. Coca-Cola at least. So fair play to him for that. And with that, I think it brings me to the end of today's pre-stream. And I'll leave you with 7 minutes to get on to the actual stream. If you want to find Warren Buffett's stream, you can find it by Googling Yahoo Finance, Berkshire Hathaway Annual Shareholder Meeting, and you should be able to find a high quality stream there. With that, folks, thanks very much for watching, and enjoy the annual meeting. Cheers.